Hey guys, so in this video I will be going over chart patterns and showing you where to enter and exit in the market. So we're starting on Euro USD 4 hour. So we're going to grab our trend line and I am going to show you an inverse head and shoulders pattern. So we're just going to draw, I just cover the left shoulder and then the head and the right shoulder. So I just put left shoulder underneath. Once you guys have been doing this for a while, you won't have to put the text underneath, like you'll be able to just recognize it. But for now, just do this so you know. Okay, so that's the head. And then this is the right shoulder. So we have left, head, and right shoulder, which is inverse. So now I'm just going to draw the neckline and see our key level right there. It's 1.09400. So I'm going to input that in the coordinates. And you can see how price respected it. And then I'm just going to highlight it. You can change it to whatever color you want. So now I can see that price is heading up. We even had a bullish engulfing and we broke through that trend line and actually retested. So now I'm drawing a resistance level. So always look left. See where price failed to go lower, see where price failed to go higher. That's what you're doing. Sometimes it gets confusing of which tool is where, but eventually you'll get the hang of it. But sometimes I even get confused because TradingView changes their stuff all the time. So this is the break of the neckline. Then we had, we tested resistance and we respected it. So we can see now that looking left, we had resistance there and price dropped, and then now looking here, we had resistance as well. So this is a double top formation as well off the resistance level. So I just kind of highlight it like this. And then price dropped and tested the trend line and retested. So the biggest thing to consider is where do we enter? So from the neckline to the resistance level is about 160 pips. So that would be our entry, that retest right there, and then we would just put a stop loss below. And then, like I said, make it whatever color you want. I just try and change the color so I'm not like confused. So then we're going to take our long position and we're going to enter our coordinates. So we're going to go inputs, and then we're going to go entry price. And remember, we want to round it. So 1.0200. And then we want to have our stop loss below. And then our first target is going to be just by that resistance, because look what price did. It came up, but then it actually eventually broke resistance, but you just want to make sure. So obviously when you have a certain account size, just put whatever you have and how much you want to risk in there at the top. So our profit level, we want to make even, so I put 850. So this would be our first target. And then what we're going to do is identify the next resistance level. So always look left. Not too far back, but like I said, a month or two ahead. And then our next target would be up in that area. So again, we want to round it. Realistically, we could make it 1.14, but I just want to, that's good enough. Again, we don't want to be super greedy, right? Because we see that resistance level, so we want to take profit just in case. And then if it does break and retest, then we can go from there. So now looking at Euro AUD, we're looking on the daily time frame, and we're looking at a head and shoulders pattern. So we have our left shoulder. So again, for resistance, I like green. For purple, I like support, but it doesn't really matter what you use. So I'm just going to go to text. I always get so confused. And then I'm going to put left shoulder. And then I just copy and paste. That's the easiest way. And then you can just edit the text. So that's our head. And then this is our right shoulder. It's funny because when I first got into Forex, I would always bug people like, oh, I'm trading the Head and Shoulder pattern today. And they're like, what is that? Shampoo and conditioner? Like, it was super funny. No one has any idea what it is. So now we're going to draw the neckline. Okay, so 150,250. Perfect. So now I'm going to label that the neckline. So this is a perfect chart pattern. This played out perfectly. So nice left shoulder, head, right shoulder. We had a break of the neckline, and then we also had a retest. So right there can be our entry off that retest. And then taking out our short position. So we want to calculate our entry, stop loss, and take profit. So again, you can put in your account size and risk, whatever it is, later on. Sometimes you have to edit that twice. It's kind of annoying. And then the stop loss is going to be just right above the right shoulder, because if it goes any higher, that's indicating that price is going to go back up, and that is not a head and shoulder pattern. It could turn into a double top. So we are risking 65 pips, or 71 pips, 65 to 71. And then our take profit will be around here, just above the neckline. So that would be our first take profit. So this is a 1-to-6 ratio. That's amazing. And remember, this is on the daily. So this is kind of like a swing trade. So that's 446 pips and a 1-to-6. And then if we calculate that, take our short position, put our stop loss right above. And don't put your stop loss too close, remember, because there's market manipulation, false breakouts, stop loss hunts, everything like that. So you got to be careful. Like, you don't want to put it 10 pips above or 15 pips above. You want to give the market room to breathe. Okay, so this is the next support zone. So we just want to edit the input. So always rounding our prices. So I'm just going around this to, yeah, right about there. So that's about a 1-to-10 ratio. So that's like amazing. So 484 pips is this move. And we're risking 44 pips to make 484. So that's a 1-to-10 ratio. So if you calculate 484 plus 446, $484 that equals about 930 pips. So this is why swing trading is lit. I look back at this and I'm like, wow, why didn't I catch this? But this was back in 2014, so I was not trading. Okay, so again, we had a break of structure and a retest. So we could have took another position there. So now looking at Euro USD, gonna find, where is it? A double top pattern. So here's one here. So I'm just going to draw a resistance line. And then we have two tops. We have top 1. And I'm just going to change the color. So we have top 1. And then top 2. Sometimes they're not even, which is okay, but if they come up to kind of the same resistance level, then it's fine. Like that clearly looks like a double top. So I'm going to take the horizontal ray, edit the coordinates, and make it 800. So this one's tricky because we had a bearish engulfing and then we didn't come up for a retest and it actually spiked up during news or manipulation or whatever it was. So that could be considered a triple top, but it's not because it didn't go all the way up, but that's something that can happen. So we had support right there and then price went above again, spiked up, but then continued down. So taking our short position, sometimes it does that, I don't know why. So we're going to put our stop right above. Again, not too close. You don't want to get stopped out. That happens to a lot of people. They set their stop loss too close and then they get stopped out. And then the market goes their way. It's happened to me a couple times and it's super frustrating. Okay, so we just want to take target at the next, take profit at the next support that we see the market fail to move lower. So we draw that out. So again, editing the coordinates. So that's a 1-to-2 ratio, risking 65 pips. Okay, so looking at a double bottom. So we have double tops, double bottoms, triple tops, triple bottoms. So triple top is 3, and then triple bottom is 3, and then double top is obviously 2, and double bottom is 2. So we're going to take the horizontal, or the rectangle square, and we're going to plot support, and then we're going to mark it as bottom 1 and bottom 2. So I actually caught this trade back in September of last year. This was a really good trade. So again, guys, identifying these on higher time frames, always massive moves. So we're going to edit this to an even number. We're going to take the long position and put our stop loss just beneath. So our entry price is 72,465, or let's put 450. So a 30 pip stop loss to make 253 pips. Again, we're just going to round this to 75. So risking 30 to make 255 pips. Amazing risk to reward. So this will be our first take profit. So that's a 1-to-8 ratio. So 255 pips. Where's that move? And guys, since this is on the daily, we could have took entry at bottom 1 because we had different candles. We had 2 spinning tops and a bullish engulfing, but we just want to, this is after the double bottom, we take an entry. So as you can see, price is coming down. So we took profit, and then price didn't break that resistance level and came down and made a triple bottom. So we just reattach this and adjust it. So that would be our third bottom. Usually the third bottom is a really big move. So I'm just going to copy and paste this. Then I'm going to take the long position, put our stop loss just below it. Oh, I hate when it does that. So 450. And 72, 145. So we're risking 30 pips. So I usually risk anywhere from 20 to 50 pips, depending. Okay, so this is also good. 1 to 8. Then let's see what happens next. Okay, so it comes down. Okay, so we were expecting price to hit resistance again to take like our second profit, but then it came back down and tested, but as you can see, it wicked. So that's why we have our stop loss there. And then it went back up and then eventually broke the resistance line. So we're just going to adjust it. See, this line, this support line is really, really strong. But eventually, price comes back down and breaks it. So this was a nice trade. We had bullish engulfing, broke resistance, and then continued up. So a total of 510 pips were those both moves. Okay, so looking at Euro GBP 4 hour. This is where we're going to find a bearish flag. So it's kind of like an impulse and correction, really. That's what it is. So we have an impulse down and then we have a correction, and this is on the 4 hour. So this is what it's going to look like. So we have basically a top like that, and then we have the bottom, and we're looking for a bearish breakout. So these patterns I'm showing you are super, super useful, and they're really good. So that's why I'm showing you these specific ones. So we have a little resistance level there. So then taking out our short position, we're just going to put our stop loss above. Okay, so if you want, you can move the stop loss. Like this is 10 pips, but you can move it to 20 if you really wanted to. So there we go. So we'll actually make it 20 or 30 just in case, because our entry is a bit lower. And then our target. So then looking left again, we have to see where the market failed to go below. So we just mark that up. So then we're just going to adjust our target. can't be greedy. That's the number one thing. Like, we just have to follow the chart. Okay, so that's a 1 to 4, 30, risking 30 to make 136 pips. Okay. So then price pulled back up in correction, actually pulled back through that support zone, but then we have another flag. So then we have a breakout and a retest. And then another one. So this was a really good setup. So for about a month and a bit, it did this. So that was a really good setup. So then again, we want to look for our next support, which is around there. Euro GBP I actually don't trade. I use it for Confluence, and we'll talk about that later on in the course. Because certain pairs, sorry, not confluence, correlation. So certain pairs have correlation. So example, if gold goes up, the US dollar usually goes down. And certain pairs act the same and act differently. So we'll talk about correlation later on. So we take our short position, set our stop loss right above the flag, and then we have a target of right around there to our next support zone, which is a 1 to 3 ratio. So we just want to edit. Yeah, that's fine. So 155 pips, 1 to 3. Do not go lower than 1 to 2. I don't even recommend doing 1 to 2, but 1 to 2 is fine. Just don't go lower. 1 to 3 is perfect. 1 to 3 and above. So then we're just going to add up 136 plus 155 is 291 pips for that total move. And then it actually continued down again and had a retest. So GBP USD, going to be looking for a bullish flag. So right here we have an impulse and then a correction, which is a flag. Then I'm just going to draw this trend line because it respected it and continued up. So we would take our long position kind of right here. and then just put our stop loss with low. So I'm just going to edit the entry price, so 415, and then right below the flag, I don't want to put it too close just in case it did drop. If it does go below that flag pattern, then it may go back down, so that's why you just want to have the stop loss just below that wick. And then our target, 650. Then we draw that where it rejected, so right there, and then we just draw the line. See guys, once you do this over and over again, you'll totally understand it. And you just want to keep it simple. So that would be our first take profit. So then it actually came back down, but we had our stop loss. So this is why we have take profit 1, take profit 2, because again, when we have a huge bullish candle like that, price can retrace. So we want to make sure we're on point. So then we have a little minor support level there. So price failed to go lower than that and respected that level, so we continued up. So technically we can take another entry there. So then we broke up, eventually broke out of that resistance level and retested. So broke of structure. And then retest and a huge bullish engulfing. So then we want to take out our position long. And then identifying our resistance level here where price rejected. So this time this one is a good ratio. Okay, so the one before, when we took our entry before, it was only a 1 ratio. It was below 1 to 2, so there's no point taking that. So this is a 1 to 5. So risking 24 pips. So 121 pips, 1 to 5 ratio. Again, don't take less than 1 to 2. Okay, so then calculating this one. So we had that retest, so we would enter on that retest and put our stop loss right below. So then the ratio is 1 to 7. So 95 pips and a 1 to 7. So then when we want to calculate the pips, so we just go 121 plus 95. So let me just do that. $121 plus 95 equals $216. Okay, so very, very powerful moves. And that's it. If you guys have any questions, just let me know. And that's it. So if you guys have any questions, just let me know. So for your homework, I want you to do each pair like this. I want you to do the inverse head and shoulders. I want you to do the normal head and shoulders, double top, double bottom, triple top, bear flag, bull flag, everything that I just went through, and show me where your take profit 1 would be, where your entry is, and where your stop loss is, just so you're understanding the whole concept. Again, if you guys don't get this, like, just ask me and I can go through it with you, or and that's it. So if you guys have any questions, just let me know. For your homework, I just want you to do each pattern. So each pattern we went through, just identify where you would enter the market, where you would set your stop loss, and where you would exit and take profit. And then just send it to my email for a submission, and I will go over it.